So the industry, and a lot of people are surprised, is already a $30 billion industry globally. That's the legal markets, including Canada. The largest single market, just for perspective, is actually the California market. Now, that's the legal portion, so all the states and Canada and a few other countries. If you actually look at the illegal market and you add that to the legal market, the total size of the market globally is estimated to be about $300 to $400 billion.
Welcome to the Adapt Wealth Podcast. Our goal at Adapt Wealth is to provide you a free financial education, access to world-class speakers and unique investment opportunities, and to help you build a network that increases your earning potential. If you're not yet part of the family, please visit adaptmywealth.com to join our free group and get access to exclusive member content. We hope you enjoyed this episode of the Adapt Wealth Podcast. All right, hey everybody, welcome to the show. I am your host, Jason Fromer. I've got my co-host and partner in crime with me today, Derek Peterson. If it's your first time listening or your first time viewing, if you're watching this on YouTube, depending on where you're catching this, please make sure you take a minute, follow us, subscribe so you'll get reminders when new episodes drop. We try to drop content every Monday morning at 9 a.m. to get you through your week. Tonight, our guest is Mr. Vinay Shah. He's a partner at Green Access Capital. Vinay, welcome to the show. Thank you for being with us.
Thanks, Jason. Thanks, Derek. Really excited to be here today.
Yeah, man, we're excited to have you. So before we fire one up and talk about the cannabis space, to our listeners and everybody who maybe wants to get to know you a little bit, tell us a little bit about yourself. I know you come from a Wall Street and technology background, but maybe start there and talk to us a little bit about why you decided to start a private equity cannabis fund.
Okay, great. So I went to Williams College undergrad, Massachusetts. I was actually born in the U.S., parents from India. But I started my career on Wall Street at Lehman Brothers, investment banking. Then I went into equity research at Morgan Stanley. I was doing mainly software and technology research and investing. I was an institutional investor ranked analyst and lived through the tech boom and bust, made a lot of money and a lot of lessons learned. After that, I went to NYU for business school. Then I went into the buy side. So I worked at the Fidelity family office, where we managed about $6 billion for the Johnson family. I was responsible for the tech portfolio portion of that, which was about $1 billion of the six. Did very well, and then was recruited to Putnam Investments by two ex-Fidelity people. So I lived in Boston for some time. After that, I went into industry and did some work in the fintech space. I worked at a large fintech company and started a fintech company. But that brings me to cannabis. About 4 or 5 years ago, a friend of mine had started an anti-counterfeiting tech company for cannabis. So we had labels that you could put on products, and we had a consumer app. And so you could scan a product and see if it was real or fake, because that was a problem in the industry, a lot of fake packaging, as you can imagine. And so that company, I was an investor, I was an advisor, and we ended up selling that company in less than a year to a small public software company. And we basically doubled our money in less than a year. And so one piece of it was nice that we made money, obviously. But what really, the second piece was that it really got us and myself entrenched into the cannabis industry. As that tech provider, we were pitching our software and our solution to brands. We were talking to other technology companies. And I started to realize that this was a incredible industry growing really, really fast. And because there's not institutional capital in the industry, which we can talk about, the valuations are incredibly low. So once we sold the company, the name was Solo Sciences, it's all public information, we decided to start this private equity cannabis fund because the opportunity to invest was just something I haven't seen, probably in my career. And so that's why we got so excited and decided to start the fund.
Awesome, man. Well, that's quite a track record, quite a career that you have, and anti-counterfeiting. That sounds pretty cool. Like, what kind of stuff were you putting anti-counterfeiting labels and stuff on? Are we talking like packaging or like the flower itself?
Yeah, exactly. So there were two pieces. One was on the end market packaging, right? So like if it was a vape product or a flower product, so right on the package. But also we had a supply chain solution. So we actually could trace if you had flour, for example, where it came from, which cultivator, and we could track it through the supply chain. You could scan it along the way. So we had kind of two solutions, but yeah, it was a very interesting and very proprietary technology that we had developed.
Awesome. Well, Vinay, members of the Adapt Wealth family, we're no strangers to the cannabis business. I think we've invested in a couple different projects now. We did one with the Ardent Companies. They had a real estate cannabis fund, if you will. Just late last year, we took a position in a company called Session Goods, which was a venture startup in the cannabis accessory space.
Okay.
Personally, I've always felt, this is one of those industries where we're going to look back in 20 years and be like, man, and I can't believe everybody didn't see what was happening during that time period, because it just seems like it continues to build momentum, and it's basically a brand new industry as it becomes legal that's coming from nowhere.
Yep.
So it does create some of those incredible opportunities. Can you maybe give our listeners an idea on how big is this industry, based both on Canada and where we're legal here in the U.S. and what's the growth been like thus far?
Yeah, so it's a great question. So the industry, and a lot of people are surprised, is already a $30 billion industry globally. That's the legal markets, including Canada. The largest single market, just for perspective, is actually the California market. Now, that's the legal portion, so all the states and Canada and a few other countries. If you actually look at the illegal market and you add that to the legal market, the total size of the market globally is estimated to be about $300 to $400 billion. So it's a massive, massive market that still is, waiting to be unlocked. To your point, Jason, about, when we look back 20 years, what will we sort of think? And if you think about the size of that market, it's just a huge potential. If you look at the last couple of years in terms of the growth rate, last year the industry grew about 27%. The year before, because of COVID, the industry grew 45%. So it actually has some counter-cyclical or anti-recession, or nothing is recession-proof, but it's a little bit counter-cyclical that way. It just tells me that there's a lot of organic growth, and it's very early, and that's why you're seeing these kind of growth rates. This year, we're forecasting the market will grow another 20%, and our portfolio companies are growing much faster than that, which we can talk about. But we're really bullish because there's such incredible growth, and it's a global phenomenon, not just limited to the U.S. And one last thing, the medical part of the market, which is a very big deal, is almost half of that market, right? So this is not just recreational use; it's a lot of medical applications being used with cannabis.
So, Vinay, I need you to define a term for us. It's actually the title of this episode. That term is Cannabis Adjacent. When Jason shared the title of this, I was like, well, what does that mean? He's like, I don't know. Ask Vinay. So what does that mean?
Yeah, so when we think about the industry and where a lot of investment dollars have gone so far, a lot of money has gone into cultivation, which is basically farming, right, making the crop, or retail. And so one of the things that's unique about our fund is that we invest in what we call the adjacent parts of the business. We also call it the ancillary, you could also call it the technology parts of the business. So we don't invest in anything that directly relates to growing the plant, because we think that's going to become a commodity, and that's not where you're going to get the best returns. So we invest in what we call the adjacent sectors of the cannabis market. And so, for example, there's a lot of subsectors that we like, which we can talk about. But we don't invest in the crop per se, and that's why it's adjacent.
Got it. Well, let's talk about some of those, right? So obviously, your mind can go into all the infrastructure that supports a multi-billion or multi-hundred billion dollar industry like that. What are some of the things that you're seeing, or that folks that are investing in your fund getting exposure to?
Yeah, so there's lots of great companies and great sectors. I'll start sectors, and we can talk more about companies. So we are seeing, some really interesting companies in the software side. There's, retail management software. There's point of sale systems. We've done some investments on the data analytics side, right? So there's a lot of companies that are, are becoming the next wave of, AI, focused companies, or artificial intelligence. We're doing investments on the genetic side. That's another very interesting area, because the plant is not that well known. There hasn't been a lot of research done, particularly at the federal level. So we're still just learning, so many things. And so genetics is very valuable. We've invested on the e-commerce side. And so the theme that I think that runs through all these areas, hopefully you guys are seeing, is that we only invest in things that have, very strong IP, right? Very defendable. And whenever you have a new industry, there's a lot of innovation that happens at the company level, right? So we're investing in this sort of new generation of companies that are cannabis experts, right? And having been a technology analyst, whenever you have a new vertical, you have a new set of tech companies, a new set of infrastructure companies. And so that's where we are focused. And but we're seeing incredible opportunities across those subsectors.
But I guess, and I apologize, this is a dumb question, but why, right? I mean, I understand that it's a new industry because it's being legalized for the first time, and now people can go into sort of different storefronts and they can buy different things. But wouldn't a point of sale system that works at Whole Foods be the same point of sale system that works at Curaleaf? Why, just because it's a new industry, or does that necessitate new companies? There's genetics companies right now that focus on genetics. Why does there have to be a specific genetics company that focuses on cannabis?
Yeah. So again, great question. So if you think about software and point of sale, and I worked at First Data, which was the largest point of sale company in the world. If you think about, I don't know if you guys are familiar with a company called Toast. So Toast did basically restaurant POS. So that's all they do, and it's a multi-billion-dollar company. And so whenever you have a new vertical market, there in cannabis, some specific things to cannabis, there's a lot of compliance that has to happen, right? So the software has to deal with compliance. The other thing is that there's lots of workflows that are very specific to cannabis, right? So for example, when you go to a dispensary, you've got to check in with your ID. That gets captured in the system. And so all of these things, when you add them up, create a barrier to entry, right? So when I spoke to, so we've invested in a company called Trees, as an example, which is the largest retail management software POS company. They just raised $50 million, and Synchrony Financial was an investor, which is the former GE Capital, if you guys remember that. And so the reason they invested is because there's so many specialized things in the cannabis space that will be very difficult to replicate. And when I talk to my old First Data friends, which is now part of Fiserv, they tell me that if they want to get into the industry, they're going to have to do an acquisition. They're not going to be able to go to all these retailers, one, reproduce the software, two, try to replace the software, right? So software is very sticky, and that's why you've seen in other industries like Toast and restaurants, there is room for vertical market experts, right? So similarly, in the genetics side, because it's not federally allowed, there are very few companies that are even able to do genetics research, right? So that's creating a window of opportunity for a new breed of companies that are just focused on the cannabis plant. So we're very excited that we're investing in these sort of next generation leaders. And it's very similar to what I used to do in tech, right? There are all these vertical market experts that eventually get bought by the large guys.
That's interesting. Yeah, just learning about all the opportunities because of this new $500 billion industry that opened up, it's pretty fascinating. And I think another reason why a lot of this has opened up is because of regulation, right? Regulation has changed over the years, and so what's going on with that, specifically with the U.S., the federal government? Naturally, when there's a lot of money in something, the U.S. government wants to get involved, right? And with that being said, do you see that happening? Do you see them legalizing it at a federal level? And then really what type of implications does that have from an investment perspective?
Yeah. So we are very bullish on legalization in the next 3 to 5 years. It's very difficult to put a time frame on it, but the reason we're so bullish, a couple of sort of stats. If you look today, about 41 states have already legalized for medical. On the recreational side, about 20 states have legalized, and you've just seen in the last year, 2 very big states, New York and New Jersey. I live in New York. Have legalized, right? So you're seeing, some major states legalize, right? So that's what's happening if you just look at the data on the state side. If you look in Congress, if I would have told you this 2 years ago, people would have probably laughed at me, but you have the Democrats are putting forward a bill for legalization. The Republicans have also put forward a bill for legalization last year. Now, though I think, the Democrat bill has passed the House. We don't think it'll pass the Senate. There aren't enough votes. But just the fact that both parties are now having a discussion about this sort of tells us it's sort of inevitable. The tax revenues in many states for cannabis is exceeding that of alcohol now, right? The economic impact, I gave you that 30 billion industry number. The economic impact of cannabis in the U.S. is estimated to be closer to 90 billion. So this is too big of a market for the federal government to ignore. And so, so we're very confident that this will happen, right? And that's why we started the fund. The second part of your question, Derek, in terms of the investment implications, see, there's an arbitrage in this industry. And the arbitrage is very simple, is that because it's federally legal, you don't have institutional capital coming into the space. So when I used to do private equity deals, when I was at Fidelity, I'd be sitting with a guy from BlackRock, Blackstone, Goldman Sachs, Morgan Stanley, right? Today, when we go into deals, we don't have that kind of competition, right? And so we can dictate terms, we can dictate valuations. So we're investing in these companies at incredible discounts to what we call intrinsic value, right? And so that's the investment implication. Now, if you get federal legalization, what will happen is you'll get a flood of capital from these institutional investors, right? And so we think the value of our assets and our portfolio will go up, it could go up 2 to 3 times overnight just from federal legalization and normal capital flows. So it's not just, so the two pieces are demand should go up, right? It unlocks that illegal market, which we talked about earlier. And second is that the valuation should go up of the assets and the things that we've invested in because you've got a normal flow of capital, if that makes sense.
So stay there for a minute because that was going to be my next question. And I think you just completely turned my perception on its ear. So what I was thinking is that would be a risk, right? Like, okay, you're working with these companies. They got this proprietary technology because it's still, very nuanced and very regulated. And so they have to have a specific point of sale system, just to go back to that example. The minute that those ease up a little bit, right? And now it's legal everywhere, and now maybe they don't have to only take cash, then it's going to allow much more competition into the market, and that company loses its niche, it loses its competitive advantage. So I was like, well, I view that as a negative. But what I'm hearing you say, and I want to repeat it back to make sure I heard it right, is you actually think that that's going to be the driver of returns, because once some of those regulations ease and we get much more broad-based legalization, that should bring an influx not just of growth, but it should bring an influx of institutional money that then makes those companies more attractive because they're in the driver's seat. Am I saying that right?
Yeah, you nailed it, Jason. But you also, one thing you said is that there will be lots of competition in cultivation and retail, right? And so that's why we are so focused on not investing in those areas. To give you a quick example, right? So today, each state is kind of a walled garden. So there's no interstate commerce, right? So if I grow in California, I can't sell in New York or New Jersey. So the day you get federal legalization, you would have interstate commerce because that's just part of the Constitution, right? So our point is that, if you're a software company, it's very difficult to replace. It's, very technical. But if you're just a grower, if you're basically a farmer, and I can import from California now, why am I growing, in Michigan where they don't grow anything really, right? From a crop standpoint. So to your point, Jason, there will be losers from increased competition. The key for us is to invest in the companies that are going to be winners that will also have, incremental valuation bump ups as well as increase in demand. But there will be losers, and that's very, very important to distinguish between the two.
So wait a minute. When you say the walled garden, so that means, and for the record, I have my medical marijuana card in Florida, so I know some of these dispensaries and what the experience is like for the consumer, strictly for research, I assure you. But my question is, does that mean that anything, if I walk into Curaleaf here or I walk into MedMen here in Florida, that all of that flower had to be grown in Florida? They can't bring it across state lines because it's federally illegal?
Nope. And that's why... So that's why the companies that are, in Florida, I would argue many of them are over-earning because they don't have real competition, right? And so that's why we don't invest in those types of businesses.
But the same in like Massachusetts, right? Massachusetts, it's legal there recreationally. Now, because it's legal recreationally, they still have to cultivate all of that in Massachusetts?
Yeah.
God,
and Florida's
inefficient.
Yeah, it's very inefficient, right? And so the pricing... for flower, just to give you guys some numbers, the pricing for flower in California has dropped 65% in the last year, okay? Just because of oversupply in California, right? And so, companies are struggling there. And that's what you're seeing in the public companies, to the extent you follow some of the public stocks, is because they're seeing price pressure. In our portfolio, our companies last year, grew 100% year over year. And our companies are not even talking about any price pressure, right? Because we are investing in very defendable business models versus, cultivation and retail.
That's crazy. So,
yeah,
really interesting. So tell me a little bit about, without getting into a full pitch, because we're on sort of a public-facing podcast here right now. You talk about this private equity fund that you have. Can you explain a little bit about how it works? 50,000 foot view.
Yeah. Yeah. So it's a fairly standard private equity fund. It's an 8-year life of the fund with 2 1-year extensions. But having said, so it's not a liquid fund, right? It's not a public fund. That's what makes it private. But we have the way we invest is a mix of what I call large, small, and mid-sized companies. The larger companies will probably have liquidity events, sooner than obviously the 8 years. So we expect to return capital, along the way. So it's not like you just get a bullet payment at the end of 8 years, right? So that's typically how the private equity world works. In terms of fees, we have it's a typical 2-20 structure, 2% management fee, 20% profit share or carried interest. One unique thing about the fund, though, is we have an 8% preferred return, right? So we give our investors the first 8% before we make any money, right? So all capital has to be returned, and our investors have to make 8% before the fund makes money. So that's a nice, I think, investor-friendly element. And but yeah, I think it's a fairly standard private equity fund in that sense.
How's it doing?
It's doing well. We've made 6 investments so far. If you look at a few portfolio statistics, I gave you one earlier. So last year, in aggregate, the companies grew about 100% year over year. 33%, which is 2 out of 6, 33% of our companies are already cash flow positive, free cash flow positive, right? This year, we're projecting those same companies will grow up over 50% year over year, all organic growth, no acquisitions. And the average multiple we've paid for those revenues, for example, is about 2.4 times. So, not to get into a big valuation discussion right now, but, that's very, very low multiple for, a set of companies, I think, growing, 55% organically revenues with, very high gross margins. And again, 33% are already free cash flow positive. So I think the fund and the companies in the fund are doing, very well. And I mentioned Trees. They just did this big round of investment. They raised $50 million. Synchrony Financial was one of the big investors, and that was a nice markup for our portfolio. But for any investors that come in right now, and this is, again, why we're going to close the fund soon, is that we are allowing people to come in at the same NAV, so to speak, right, of the initial investors. And so that's something that we can't keep open forever. But that's another nice feature of the fund. But I think overall the portfolio is doing very, very well.
So Vinay, without asking you to give up too much of your secret sauce, whenever I learn about new businesses or new industries, my wheels start turning. I gotta ask a couple of follow-up questions on that. So
yeah,
how do you even find these companies? Right? It's not like you can. I mean, maybe you can just Google search them, but we're in a cutting edge market that's a little bit off the mainstream radar. You're not learning about them on CNBC. Yeah. I know you've got a tremendous track record in tech and in finance and all that, but where are you even finding Trees?
Yeah,
how do you come across it?
Yeah, so first we've got a great team. There are 3 partners. We have 4 advisors. We've been in the space. The oldest of us have been in the space probably 6-7 years, right? So we have a pretty big network, right? But to give you some more specifics, right? So as I mentioned, we were actually operators in the space at Solo, right? So when we were at Solo, we talked to almost all of the tech companies because we wanted to partner with them, right? So for example, Trees we met because we wanted to have them accept our seal of approval, right? That anti-counterfeiting. We wanted them to be able to scan it on their POS, for example, right? So that would require an integration. And so when we were at Solo, we built out a big network, right? Separately, one of our partners, Bill Marcus, he ran something called Green Table for many years, which basically put together investors
Hi,
with.
Derek. Oh.
Hi. Um, so one of our partners, Bill Marcus, put together something called Green Table, which brought together investors and companies in the space, or in the early days of the space, right? So we have a huge Rolodex, right, and a huge network. But what we do, sort of, at a sort of day-to-day level is because we're institutional, we have institutional backgrounds, right, is that we actually mapped the entire cannabis sector, right, all the subsectors. And once we know that we like a subsector, whether it's software, e-commerce, data analytics, then we, identify which are the top companies in that space. And then we, go through our network to find them, or we reach out to them, and so we just have so much connectivity in the industry that we're able to find these companies. So that's kind of from our network and what we call, sort of proactive. On a reactive side, as I mentioned, because there's not a lot of institutional capital in the space, just having a fund, you just get lots of inbound, because capital is scarce, right? And so I think between the two, a very proactive approach, and this is what Andreessen does, this is what the best VCs do, is they basically go out and find the deals before deals happen, right? They don't wait for companies to raise capital. So we've adopted that same approach.
How many of the folks are out there doing what you do now?
In terms of funds?
Well, I'm assuming there are a lot of other venture companies that are taking stakes in cannabis adjacent, but I mean specific focused. Your fund is strictly focused on the cannabis space. Are there others that are following suit?
Yeah, there are other funds. I have not seen a fund that's as focused as we are. See, most of the other funds invest in everything. They've invested in cultivation, retail. And I think again, I don't want to say others are making a mistake, but the reason we don't do it is because, again, I think those companies, they look like they're doing better than they are because they're over-earning, right, because of these walled gardens, which we talked about. So I think our strategy of focusing on the tech, ancillary, the adjacent markets is fairly unique of the funds that are out there. But there are probably 10 or 15 funds out there. And so I think, I don't know if our goal is not to necessarily be the biggest, but we want to have the best returns, right? And we want to deploy capital very carefully for our investors. So, and I think we have a very unique strategy that way.
Awesome, man. And Derek, I'm sorry I'm hogging all the questions. I just got one more. I want to circle back to something Vinay said. And I think you used the term NPV, but correct me if it was something else. Because this podcast goes out to a wide breadth of an audience with various levels of experience, what I heard you describe was, the initial investors in your particular fund came at a certain valuation. And then obviously since the time you started to present day and before the fund closes, there's been significant movement with a company like Trees getting a round of funding at $50 million. That inherently brings up the value of the fund. Right. But investors right now are getting to invest as if that had never happened, right? So they're getting some of that intrinsic value at the time of investment. Did I say that right?
That's correct. Yeah. So it's a NAV, net asset value.
NAV,
right.
Okay.
So the net asset value is not changing for new investors. The only thing is, you remember we talked about that 8% preferred return. Obviously, if you come in today, your 8% the clock starts today on that 8%, right? So initial investors get 8% from the day they invested, right? If it was a year ago, right? So that's a timing difference. But yeah, otherwise it's a nice way to get in. You can you can see the portfolio companies. We can talk about the data and how well they're doing, right? So, but that is a unique aspect. But to your point, Jason, we can't keep that open forever because the value of the portfolio is rising.
So Vinay, what's the average investment size for a fund like yours typically?
Yeah, so from the fund, we do typically about between 1 to 3 million out of the fund per investment. But we also have a co-investment vehicle. So what that means is that on individual deals, we can bring in other investors just on a deal-by-deal basis, right? And we charge lower fees on that. So for example, if we've invested in Trees from the fund, but when they raise that big amount of money, we could have brought in our co-investors to take a bigger stake, right? And so, but typically from the fund, 1 to 3 million is sort of the size.
Okay.
And what about for I mean, that's the investments that you're making in these companies. What about for Joe investor, right? Someone who wants to invest in your fund. What's the average investment size for somebody like us?
So so today we have a $500,000 minimum. The average, we've brought in about 30, 40 investors, and so we did have a friends and family round. So some people came in probably a little bit less than that 500,000, but that's our current sort of minimum on the fund.
But clearly, if there were, if we, let's just say, for example, I'm not asking you to hold us to this, but if the folks listening to this call, if they were part of the Adapt Wealth family and we wanted to put together a special purpose vehicle and collectively come in, as long as we collectively met 500, that would pass the muster?
Yes, that would pass the mustard. Yeah. So we would definitely encourage that. We've had other groups do that. We have some other groups that are in the fund that have come in through an SPV. So we're happy to work with you guys to facilitate that. Would love to get your network involved.
Awesome. Yeah, and I know today we talked before Jason wraps here. We talked a lot about the sort of the business side of the cannabis adjacent space, right? And there's a whole other side of this, which is the health side. For those who are listening, we're going to be releasing a podcast tomorrow. So right after this one was released. So tomorrow you'll have an opportunity on the Adapt Health podcast to speak with somebody that's part of your company, Dr. Kaplan, who's an expert on the health benefits of cannabis. So I'm excited to have that conversation with him and to share that with the community. So I just wanted to mention that to those who are listening. We got the financial side, or we got sort of the health benefit side as well.
Love it. Well, you gave me a minute to think about my hard close for Vinay here, Derek, so I appreciate it. I mean, look, Vinay, in all seriousness, we're coming up on time. But before we let you go, and I appreciate the fact that we might be able to put together an SPV and things like that. This is a public-facing podcast, so I'm not going to ask you to go into too much of the details of the fund, the holdings, how the dollars flow. But I am going to ask you if you'd be willing, for our members, would you be willing to come back and host a live call with a Q&A where we could get into some of the nitty-gritty about the fund, the dollars, and see if the Adapt Wealth family would be interested?
Yeah, I would love to do that. Again, would love to partner with you guys. We met you guys through mutual friends, mutual investors in our fund. So yeah, would love to partner with you guys. So anytime, happy to come back.
Great, man. I'm going to hold you to that.
Okay.
I appreciate it. Well, man,
Thanks so much.
This has been a lot of fun. We appreciate you being with us. Thank you to everybody who's been listening. Again, please make it a priority to follow, subscribe, whatever channel you're watching this on. We appreciate you tuning in to Adapt Wealth, and we look forward to seeing y'all next week.
Thanks so much, you guys. I really appreciate it.
Thanks for listening to the Adapt Wealth podcast. If you liked what you heard in this episode, please make sure you subscribe. If you'd like to join the conversation and get access to our speakers and exclusive content, make sure you visit adaptmywealth.com to join for free. You can find our group on Facebook by searching Adapt My Wealth, and share Adapt Wealth with those in your network, because the larger we grow, the more leverage we have to force open the doors to opportunity.